Hello students. Our topic today is estate under administration. Before we start our lesson, let's review together the learning objectives of the topic. At the end of this chapter, students should be able to explain the responsibility of the executor and the penalty imposed for non-compliance. Second, students are also able to apportion the income between the deceased person and the executor. Third, students can explain the meaning of the domicile status of the deceased and its implication on the tax liabilities of the executor. Lastly, students are able to compute the income tax liability of the deceased and the executor. Introduction. An individual cannot escape from paying income tax, even when he has passed away. Where a deceased person leaves a will, the person authorized to deal with his affairs in accordance with the provision of the will is known as executor. The wealth that a person beneficially owned at the time of his death is known as his estate. The executor's duties include the settlement of any debts, payment of income tax and distribution of the residue of estate to the beneficiaries. Executor. Who is executor? According to Section 2 Income Tax Act 1967, executor is the administrator or other person administering or managing the estate of a deceased person. Responsibility of the executor and penalty for non-compliance. The responsibility of the executor to provide for any income tax which is known to be payable or can reasonably be foreseen to be payable before making any distribution to beneficiaries. Failure to do so will render an executor jointly and severally liable to pay a penalty equal to the amount of tax payable. Period of administration. The period commencing from the date of death to the date of last distribution of assets to the beneficiaries. During this period, the executor would continue to be liable for the income tax liability on income accrued. Basis in determining income and losses. First, business income or losses are apportioned on the time basis at statutory income. Second, interest and dividend are assessed on a receipt basis. Third, rental income. The apportionment is on time basis at net or adjusted rent income. Lastly, foreign source income or FSI is assessed on remittance basis. Deceased individual. All sources of income derived by the deceased to the date of death is taxed on the deceased individual. Personal reliefs and rebate would continue to be given for resident deceased. Executor. All sources of income arising after the death of individual is treated as sources and income of the executor of the deceased individual. The rate of tax, reliefs and rebate applicable to a deceased individual would depend on his/her residency status. Is the deceased individual a resident? If the deceased individual is a resident, they are eligible for a scaled rate with reliefs and rebate. Conversely, if they are not a resident, a flat tax rate of 30% is applied, without any reliefs or rebates. The rate of tax applicable to executor would depend on the domicile of the deceased individual. Deceased person died domiciled in Malaysia. If the deceased person passed away with domicile in Malaysia, the executor will face a scaled rate along with a special relief of Room 9000. However, if the deceased person was not domiciled in Malaysia, the executor will be subjected to a flat tax rate of 24%. The table below shows the tax computation format for deceased and executor. That's all for this topic. See you soon for another topic.